Hi, this is BJ McKellar with Real Property Management DC Metro, here with a quick spring 2026 rental market update for Washington, D.C. After a slower fall and early winter, the DC rental market has definitely warmed up this spring. We're seeing properties that were taking over 40 days to lease in November and December now renting in closer to 25 days on average. That means more showings, more applications, and faster turn times once a home is priced correctly and presented well. At the same time, it is very important to understand what is not happening. We are not seeing a big jump in rental prices when a tenant moves out. In many cases, when we relist a vacant property, the rent ends up roughly flat compared to last year, and in some situations, even slightly lower. That's consistent with the broader DC data, where average rents have basically been flat to slightly down over the last year, and the market has shifted from landlord leaning to more balanced. A big driver here is supply. Over the last couple of years, DC has delivered a lot of new apartment units, and the rental vacancy rate in the district is now around the high 7% range, which is firmly in balanced market territory instead of the tight, landlord-favored environment we saw right after the pandemic. More options for renters means they have a bit more negotiating power, and it puts a cap on how much we can realistically push asking rents without increasing vacancy time. Because of that, our strategic advice this spring is clear. When you have a good tenant in place, focus on renewal first. A well-priced renewal with a qualified resident usually outperforms a risky turn where you pay for vacancy, turnover costs, and then discover the market will only support the same rent, or sometimes less, than what you were already collecting. In this environment, minimizing downtime and preserving cash flow is more important than trying to squeeze out an extra $50 or $100 that the market may not support. That doesn't mean you ignore opportunities. When a tenant does move out, we're watching the micro markets very closely, by neighborhood, property type, and price point. Certain areas and renovated, highly desirable homes are still leasing quickly at strong rents, but we have to be data-driven, realistic, and ready to adjust pricing quickly if showings and applications don't match expectations in the first week or two. To recap, spring 2026 in DC looks like this: strong renter activity, faster leasing times, but flat rents and more competition from new inventory. For most owners and investors, the smartest play right now is to prioritize renewals with good tenants, protect your occupancy, and let us stay on top of pricing and strategy for you. If you have a property in Washington, D.C. and want a tailored review of your rent, renewal strategy, or upcoming vacancy, we'd be happy to help. I'm BJ McKellar with Real Property Management DC Metro, and you can reach our office at 202-269-0303. We look forward to helping you navigate this changing DC rental market.